Okay, good afternoon. Really excited for the discussion today on embedded insurance and where are we now. My name is Alex Lazaro. I'm a partner with Cathay Innovation. We're a globally focused venture capital firm. We've invested in a number of insurtechs like Sidecar Health and Cover and Coherent and Scan, broadly in the fintech space as well. And excited to be here. I think for the purposes of this conversation, I probably should change my name to Chris, because we have two Chris's here as well, or they should change theirs to Alex. So I'm joined first with Chris Bailey from CoverGenius. CoverGenius is a leading embedded insurtech player, insurance distribution with e-commerce. They're in 60 countries. They have 40 million customers. They just closed their Series C, as well as with Christian Pedak, who's with Lamy, a global insurtech as well, a leading insurtech from Europe. They're in 8 countries around the world. They've done over 50,000 claims, 500,000 customers via telcos and a range of products, including parametric and things like that. Embedded insurance is a really powerful vector for the insurance space more broadly. I've written a lot about how financial services, the most successful technology companies, and more broadly, those that succeed benefit from the 3Ds, this idea of a distribution advantage, an ability with data advantage, and then an ability to, via distribution, to delight your customers. And in some ways, embedded insurance, by pushing the product to the point of consumption with partners, where the customer's at, using new types of data, and using a product that's embedded in the experience, you can actually achieve a lot of those things. So that's one of the reasons I'm personally very excited about the space. And so the format of today's discussion is going to be, we're going to have 2 long-form discussions, 15 minutes each, by each of the Chris's, and then we'll do a little bit of a Q&A. I've got some questions prepared. You can also submit some questions via the app, and should technology permit, will show up in front of me, and we'll ask those as well. And we will end at about 2:50, so we've got time for a rich discussion. So maybe with that, I will start with Chris number 1 from CoverGenius, who will lead us through a discussion.
Thank you.
The responsibility. Okay, this button here.
I actually don't know.
Okay, I'll push some buttons.
Thanks, Alex. So Chris Bailey, CIO and co-founder of CoverGenius. Next slide, please. Well done. Good teamwork. So CoverGenius, we're the insurtech for embedded insurance that protects the global customers of the world's largest digital companies. If I just break that down for everyone, for those of you who are here for education, the education component, embedded insurance is the ability to offer protection at the point of sale or point of sign up in a customer journey. Protecting the global customers, by that we mean, for us, it's our platform is available to distribute insurance through our partners in 60 plus countries around the world, 50 US states where we're licensed, both as an MGA on occasion as a carrier, and fully claims licensed in those countries as well. And the final point, the world's largest digital companies, if we just look over Leaf, we'll get a quick purview of some of those. Here we go. Okay, so Xcover is our consumer-facing warranty and insurance customer experience. So you will see it on Amazon, in Europe in particular, on Shopee, which is Southeast Asia's largest company, online retailer there. eBay, we're on the e-commerce plugins, but we also do all sorts of other insurance lines, so shipping insurance in various forms within logistics through Descartes Group, commercial lines, Intuit Books, Ola, which is India's largest ride-sharing app, and some significant partners in the travel space, including Check24, which is a very large German price comparison website, Omio, which is the largest train booking service in Europe, AXS, which many of you would know is a event ticketing service, and also they own a lot of events like Coachella, and Hopper, many of you will be familiar with, Booking Holdings, which is the parent company of Booking.com, Priceline, Kayak, OpenTable, and several others. And we work with dozens of insurance partners around the world. Some are listed there, some of the American ones there. We're working with CNA, Fortegra, Generali, Chubb locally, and Munich Re in other markets, and there's many more of these for the different lines of insurance that we do around the world. Next. So our firm belief is that insurance looks like the following. At the moment, what you've got on the left is that it tends to be more singular relationship between a customer and the insurer, and for them to get insured, it takes a second step. So that second step is critical to understanding what we believe is wrong in the insurance industry, because the second step is inconvenient, the second step leads to underinsurance, and the second step means that the actual opportunity is unaddressed, and we look at ways that the ways to consider what the actual opportunity for insurance is. We firmly believe in what you see on the right-hand side, which is depicted as a customer getting insurance from their favourite online company, and getting it at exactly the same time as they're undertaking the underlying activity, or undertaking an activity or making a purchase. We'll go again, sorry. So we conducted some research with Momentive and Payments.com in May. It was about 11,000 respondents around the world that are bankers, okay? Not in the investment bank sense, but you and I who have a bank account. And we put forward a proposition that if your bank embedded insurance offers that were tied to your transactions and offered real-time insurance offers, would you be interested? We studied it in 14 different countries, asked the same set of questions, and the results are quite groundbreaking. We also looked at 14 different sort of life activities or major purchases that people undertook in the last year, and asked them about their behaviour around how they got insurance for that and what they would do next time. So let's look at some of the data. So 78% of those who have digital bank accounts, i.e. neobanks, are highly interested in receiving bank-embedded insurance offers. That figure for digital banks in the US was 70%. Globally, 70% of all people that have a bank account are highly interested in receiving real-time insurance offers based on transaction monitoring from their bank. So if we break that down a little bit, 82% of those consumers who use traditional insurers or brokers in the last 12 months expressed a desire to switch. So they would be more interested, they would be highly interested in bank-embedded insurance offers next time. It was a bit lower in the US at 56%, probably as a representation or a reflection of the diffuse nature of the banking sector here and the lack of digitization. 75% of fintech app users said that they are highly interested, and the breakdown therein is really interesting as well. In some markets, it's up to 98%, but 85% of buy now, pay later customers are highly interested in receiving bank-embedded insurance offers. 90% of people who use accounting software are highly interested in the same offers. 75% of mobile wallet users are highly interested as well. So they're three examples of fintechs that have access to that transaction data and could embed insurance offers, and their customers want it in vast, vast majorities. Also, interestingly, 80% of business bankers, i.e. you have a business bank account, 80% of those users are highly interested. And it varies all around the world, but those are a good example of digital, of people who are highly engaged in digital banking and really are excited by the prospect of bank-embedded insurance offers. And the big question is why? So 49% of people selected convenience as the primary reason. This is a critical finding, and it ties back to the whole belief that we've outlined at the start of the presentation. Why do people actually have this strong desire, stated desire to receive their insurance ongoing from services that can access, that can do a point of sale sign up, a point of sale purchase. So convenience is critical because it removes the second step. The next most important factor that people said was trust. There was a few exceptions. Globally, there was only 3 countries which didn't say that convenience was what it was all about. Germany, where every man, woman, and the pet dog is a licensed insurance broker, then it's the convenience thing is less important because you can go to the family dog. In Korea, where there's a lot less digitization of the whole banking experience, and Canada, where regulations prevent banks from offering insurance. So there's a bit of dissonance around the question in the first place. However, I can't change the regulations, but it kind of goes back to that critical point around convenience and embedded protection being that end goal of removing the second step and the underinsurance that comes from that. We also asked about price, and that was one of the lowest reasons for people to be interested. And those of you who are in embedded protection or have seen any of the results or are interested to speak about it, you'll also know that claims loss for embedded protection, whether it's through banks or telcos like Chris has specialised in, or whether it's our style where it's a digital journey, those of us who are kind of witness to that know that the claims loss is very good from a risk perspective. So we conducted similar research in retail and found that 60% of customers prefer to buy their protection from their favourite online retailers, but only 59% of people were offered protection last time they shopped online. So the types of offers that you might see online are obviously warranties, theft protection, shipping, porch piracy, things like that. There's lots of things. Now, the missed opportunity really kind of comes home when you consider that 48% of customers said they would purchase more, and that equates to an average order value increase of 62%. So just really by offering the protection, you increase the amount of sales of the underlying service or product. Okay, related to that is that we feel that we're in a new era of protection, and the pandemic has been a harbinger to something that was happening anyway, and that is that the digitization of insurance and the coming to the fore of big technology giants, or as we might say, them taking their rightful seat at the table, is playing out. In this looks at trip insurance. This is attach rates across our network of partners. And what we're looking at is USA and Row attach rate increases since the pandemic. So in the US, attach rates in trip insurance are 647% higher than January last year. So for Americans in the audience, please raise your hands if you typically bought trip insurance when you went internationally before the pandemic. There's about half a dozen. How about when you start traveling again, are you going to buy it? Okay, so pretty much everyone. This is exactly what we're seeing, and we're seeing it across all the industries we work in. So it's not just trip insurance, it's in the retail experience, as I talked about, through shipping partners like Descartes ShipRush that we work with. We're seeing it end-to-end in renters as well because of the uncertainty around that. Now, we don't think that this is a temporary thing. Just because whether or not COVID is a temporary thing, but because fundamentally what's changed is that those companies that maybe used to offer insurance or thought about offering insurance, the relationship has changed and they're stepping up. What their actual role is to protect their customers and give them peace of mind, and the customers will respond because they're dealing with their favorite online service or company, and they're doing it in a seamless single-step process rather than the second step that we saw earlier, which leads to underinsurance, untapped markets, and a lack of tailoring of the insurance experience for what the customers are actually doing and needing. And this ties back to the survey, the results that we saw, that so many people actually want to get their insurance from a different mechanism than their current setup. Thank you.
Okay, and with that, thank you, Chris, and we'll call Chris to come give us the second keynote and 15-minute conversation.
Oh, thank you. Thank you for this very impressive presentation, all this quantitative stuff. Wow, really impressive. I want to take you through a more emotional tour. Well, I'm still waiting for my notes, maybe. You can help me on that. Oh, yes, lovely. Thank you. I will take you through a more emotional tour, and we will see where insurance coming from and why it's there. Most probably they put me on the stage to keep you alive after lunch. I hope you enjoyed lunch, and I hope you enjoyed what we have experienced here together, these wonderful events. Well, we have been dancing together, we have been partying together, we have been talking about facts, figures, we have been talking about trends, we have been talking about what's making us move. But that party, it has a defect. Something's wrong. Outside this very exciting event here, nobody is interested in insurance, not talking about embedded insurance. One of my friends just recently coined it very well. He said, InsurTech combines everything I really don't understand. I have no clue. It combines technology with insurance. And, well, he's not a techie guy, but I can tell you he's not an insurance guy either, and he finds it really boring. If people don't understand what we do, well, that's a perfect black box, isn't it? It's intransparent. People don't feel trust, and how can they? Because they feel confused, and they don't know what we are talking about. If we have a claim, well, we all know. And even those who won't admit, they know that if we as insurance companies, we pay out less, we earn more. But hey, we are InsurTech. We are on the cutting edge of the industry. We are changing the industry. And we need to be careful what we do. Because if we are just digitalizing the same old crap, we will have digital old crap and nothing else. So make it more meaningful, make it more convenient. And can you see this elephant in our room? It has some bold letters on its skin. And it says, hey, that won't work. Why won't it work? Because we are living in a global village. In a global village, where everybody knows everything, where everybody has direct access to information, where everybody has a voice, where everybody has a topic, where everybody has a stage, and where institutions have lost their information privilege and their education and their knowledge privilege. And that's good, because now people are empowered and not doing anymore what we want them to believe and what we want them to do. Well, and all of us know that people don't buy the best product. They buy the product which they understand best. And now we need to change the method. We need to change the system. Because in a fully digitally informed world, where information is on our fingertips, we can't continue the old method. At that time, I need to borrow from Obi-Wan Kenobi. I feel a great disturbance in the force. And I feel a need in disturbance of the industry. And is that the end of the business model? Well, no, it's not. If we listen to Buckminster Fuller, well, he tells us that we shouldn't change established systems, but we should adapt a new method, and we should introduce new principles to that industry. What if? What if there is an insurance company which is paying out on its promises unconditionally, and which is still making a profit? If we do it like Steve Jobs, we're not talking about technical details, about calculation power, and about other nerdy stuff. We just put 1,000 songs into the pockets of our clients. What if? What if we pay out 100% on claims? Isn't that refreshing? Isn't that vision worth sharing? Well, I'm proud that's our mission, our vision. Our vision at Lamy is to pay out 100% claims. We settle. You call us, we settle. And I have to admit, that's an infinite story. But maybe we don't reach all our targets. Maybe we don't fulfill our hopes, but we never give up on our mission. We never give up standing to fight for our vision. In good times and in bad times. You can always count on us. And this is a special story of friendship. You can always count on us for sure. And that's what friends are for. And friends can look like this way. They can look like that way. Or just like that. That's what friends are for. You believe I'm a dreamer? Maybe. But there is a big community. And let's grow it. And let the vision become a living fact. What drives us is not profit. What drives us is the value for our customers. What drives us is the convenience for our customers. The value, the convenience, more. And fortunately, so we can fulfill our vision and have the technical grounds for it, there is a new option at our hands. And the option is embedded. What does that mean? Well, with embedded, we have the customer at the right place, at the right time. He's buying some valuable good, some valuable service, maybe with significant financial impact on his wealth. And he is prepared to listen to us. And if we are playing it well, and we are deploying the technology well, we can make him understand intuitively what this insurance cover is paying and what it is not paying off. And then, when the claim arrives, well, we can fulfill his need. We don't need to decline because he knows what we are standing for. Together with a culture, together with technology, we are ready to deliver. I can read your mind. You will ask yourself, is it working? And I can tell you, yes, it works. At Lamy, we work at a 98.7 settled claims rate. We have a loss ratio of 40%, and we are running a net promoter score of 82% all over our portfolio. Having said that, those customers, which we still decline, they give us a net promoter score of 78%. And you can get it. You can get it if you really want. You can continue. It's your choice. But you get part of a new story as well. and create figures which you have never created before. You can create turnover which you have not seen before. And you can create margin which you have never seen before. So it's time for a new story. Join in. The decision is yours. And if you want to talk about it, come around. Let's talk. That's what friends are for.
Okay, thank you so much. So we now have time for a little bit of Q&A. I invite you to share questions via the app, and I'm told that the magic of technology will make them appear in front of us, and we'll loop them in. But in the meantime, I've got a couple questions and topics and areas I'd like to bring the conversation around embedded, and one around the promise, and then also kind of where the challenges are going to lie. So we'll talk a little bit about some of those areas. Maybe we'll start kind of high level. A lot of people talk about how the global industry of insurance might be at a tipping point, perhaps accelerated in some of the charts, Chris, you showed around COVID and the pandemic, showing that. I'd be interested to hear, one, how you think about that, and two, what that means specifically around embedded insurance. Maybe we'll start. We'll go this kind of way. Chris, you could start, given you.
This one. Yeah, look, the pandemic's obviously a major catalyst but as with every seismic event, there's the precursors are there, and you get that sort of step change. You get a decade's worth of change in 2 weeks for what would have happened either way. So the digitization of retail is a remarkable example, but so has been the digitization of all the various bits of that value chain, and including the influence on customers around getting the certainty. So look, and that's just in one smallish sector. If you look at the warranty and contents insurance market globally, you're talking about 100 billion of that. A lot of it is, a fair chunk of it is embedded. If you look at AppleCare as by far the biggest embedded protection service out there, I think the numbers on that are about 12 billion. And that's 12 billion that a traditional insurer isn't going to pick up through a contents policy, right? So there's ways to think about it. If you're ever thinking about the numbers that surround the embedded opportunity, take the research cap off and think about, well, what is embedded, and then you actually see that it's a really, really significant market. The interesting one for us was we kicked off in 2014 with a partnership with Booking.com, and car rental insurance as a standalone product was completely ignored. That's a $7 billion embedded protection industry. A lot of startups get funded with a much smaller TAM than that, right? As you know, and so that's $7 billion, and it's producing $6.5 billion of profit, and it's all going to Hertz, Avis, etc. And the consumer outcomes for those guys are pretty disastrous. It's you kind of let's say politely, you're very challenged if you do take their waivers, and you're very challenged if you don't. And that's an example of an unaddressed opportunity. There was a lot of people doing travel insurance, which is $21 billion global addressable market, that produced about $12 billion at around 2014 when we joined in. So there's lots of ways to think about what is the size of that opportunity, and there's lots and lots of niche areas, but it's not just about the niches. There is major lines contributions available.
That makes sense. And maybe Christian, I'd be curious to hear your perspectives on this, because you also sell via the telco channel, but you have a range of products that you offer via that. Maybe you could share your thoughts on it too.
Yeah, and our products are not enough to cater for the life, how it has changed. And we almost forgot how our life has changed. In the 80s, we were looking into telephone books. Then we were putting CDs into CD players. And now nothing of that has remained. When we talk about travel insurance, well, travel, you almost don't need to travel anymore, because you can do it on a virtual basis. So that means You're not leaving your home bases. you just meet other people online. But I'm just joking. Obviously I'm exaggerating, and I'm talking about what has hit us quite badly during the pandemic. But the matter of fact is, we are not seeing a travel agency anymore. We are purchasing our flights, our holidays online, such as we do with other incredible stuff. We are purchasing cars online. Of course, we are looking at the stockbroker online, and we are purchasing our home online, sometimes even without seeing it. Why? Because the information is splendid. I can get a much better impression of the house I'm buying if I look at it online. I can get a much better data set of the house if I'm looking at it online. Other than that, somebody, an introducer, would open the door, and maybe I get the smell, but is that really what I need if I'm investing that much money? Now comes insurance, and if we are embed insurance into this stream of data, into this stream of convenience, into this, we merge it into continuously and seamlessly and conveniently and intuitively into our life, we have an endless portfolio of products which we can offer. Well, we do. For example, with travel insurance, we offer it through mobile operators. So the mobile operator knows exactly where his clients are. And so do we, because we are sharing that data. And when you travel from one state to the other, we are just activating your travel cover seamlessly. And we are charging you on a daily basis, depending where you are and how long you are.
Yeah, and maybe I'll just take a quick take kind of question on this that came in from the audience as well, because a lot of the examples that we're talking about have been consumer focused, right? And travel insurance, et cetera. Do you think that embedded works as well on the commercial line and the B2B side, or is this more a consumer phenomenon?
Absolutely, absolutely. So you think about when you're setting up a business, you're using an incorporation software. Would you prefer to get the insurance in a seamless step around that? Or when you're setting up your QuickBooks account or your Xero account, etc.? Or would you rather go and get your D&O as a second step? So regardless of the type of insurance, it's going to be a better outcome if it's a seamless and convenient experience where the insurance is available at the same time as doing something else.
Totally agree. Nobody wants to retype data, wants to answer the same questions again, wants to fill proposal forms, and wants to be nice to somebody who he doesn't want to see actually. I'm so happy that I don't need to see my bank clerk. I just do my banking online. Why should I do it differently with any kind of insurance?
I'd be curious in this world where insurance distribution is shifting to the point of consumption of something else, right, via embedded. How does this shake up the roles of all of the traditional players, right? From, traditional carriers to agents and brokers to, the role of insurtechs. Obviously, you guys are taking that sense. But because paint us a picture, right? 5 years from now, how does this shake out a little bit as embedded scales?
Yeah, look, it's obviously it's disruptive to the D2C model. There's a role for brokers on complex requirements, undoubtedly. Particularly in commercial, and where there's a physicality to that relationship that can't be digitized around the quote and bind. So, there's lots of service providers that are helping to to resolve some of the friction around that process. So, look, I'm not a naysayer on traditional insurers, but I do think that distribution is fundamentally changing, and our view is that in line with the thesis of software eating the world, which has happened in embedded finance and it's happening in insurance.
Well, only because something brought us here, it will not bring us any further, and that's very true for insurance. Traditional insurance providers need to go to deep and profound structural changes. You cannot deliver embedded insurance for an affiliate partner. If you're not changing your structure, your culture, you can buy multi-million software systems, but if you're not changing your corporate DNA, you will never be successful for that. What do I mean? If you're not combining underwriting and claims, customers will always be very angry with you if first you promise them everything and then later give them the small print. So you need to merge, you need to combine, you need to reinvent insurance by its structure. and how it is written in the corporate guidebook.
Maybe building on this question, right? Because on the one hand, you talked about complex products versus simple products, and Christian, you talked about 100% payout objective. How do you think the product needs to be redesigned? And I guess one of the questions I have about embedded is how much of kind of the broader TAM of insurance can be covered by embedded versus there are certain things, honestly, are complicated, don't work in a parametric way on off, like are not very definable that you can understand whether or not you deserve a claim or not, and you can apply for it. How do you think about what the relative share of where embedded is going to be?
Maybe they will not invite me back again here on that stage, but let's look at it from a different way. In the Middle Age, they wrote a kind of an etiquette. You should not do this and that on the table. Obviously, there was a reason, because people were doing it. Now, I don't want to mention those things. Now, if you look at the European regulation, what they are introducing and what they are talking about is, for example, you should not sell insurance to anybody who doesn't need that. You should do market research first. Of course, selling insurance to people who don't need that very line of insurance, that's the best business, because you don't get ever a claim in. Now, with embedded insurance, the big advantage is that the customer is at the right place, at the right mind, and he knows exactly what he wants to buy for his car, for his home. And you don't need to give him confusion, security by obscurity, throw batches of information on him. No, online, what you do online, we know that very well. Online, the internet, the web never forgets. So our hands are tied, our hands are handcuffed. What we promise, they really hold us responsible for that. And we see the next class litigation coming in if we don't keep that. So that's a very interesting perspective about online, which nobody's touching yet.
Any additional thoughts as well?
Well, yeah, I mean, like there's some complexity that will remain an offline process, but what is it, $1 trillion industry or something like that? In our view, it's perfectly fine to have some of it, done in a highly skilled environment where there's a relationship and where there's complexity that just has to be borne out through that kind of interrogation that takes place. The nature of the industry is also, though, that there's enormous pots of both untapped and under-addressed opportunities that should be brought to the fore through software applications, or through, if you look at what outside of the US they call simply bank assurance. If you look at those programs, then that's hugely unaddressed. That ability just to embed the insurance into the payout of the finance that's going on.
Well, talking about complexity, that's a wonderful story. I have been studying law at the university in Vienna, and what the law professors do there, they make very simple things sound very complex. They put it into Latin phrases, and then they feel wonderful because their students don't understand them. And well, that's easy. The much more fantastic approach I saw in US when I have been studying it in Los Angeles. There the professors have been on the stage to explain very complex things on a very easy way. And my impression is that we insurers, we love to make simple things very complex in order to make them relevant. Take out the complexity. We should suffer a little bit because it's a very painful process to make something complex simple. But if we achieve that, we are embedded, we are new, we are digital, and we don't need to be ashamed when we are at the next party and people asking us what we are doing, and we are telling them, well, we are
I'd agree with that. There's a lot that can be done on insurance filing to reduce some of the complexity through new filings that are much more consumer centric.
Let me ask a question about complexity. This is also a hot take from the audience, because in many ways, one of the things embedded, when done well, right, is it obfuscates complexity. But there's a lot of data that you can get via your distributor partners. Can you talk a little bit about that side of the complexity and how you guys are actively using some of this data operationally to better price, better tailor, better customize, what have you? Let's talk a little bit about the complexity behind the hood and how you guys have done it.
I love that topic, and you need to stop me over firing on that. We are working together with a German automotive manufacturer, and to develop a new set of insurance. And they approached us and called us like, we have been talking with various German insurance companies, and all they do is they are penalizing our clients if they're monitoring them and they are driving too fast and braking too hard. So that doesn't make any sense. You're buying a Porsche, you're buying a Mercer, you're buying a Beamer, and then you're penalized when you drive too fast. That doesn't make sense. So our task is to put together insurance which is incentivizing people to drive, let's call it fluently, safely, to get around the corner conveniently, and not penalizing them. And that needs another set of data, and that needs another set of data interpretation.
Yeah, look, our view on the data is that when it's sold, when you're offering the protection at the same time as the underlying activity or item, then you get all that data at the same time. So once you're able to do that, then you're joining up the customer, the insurable asset, and you're following that straight through the claims journey. So if you look at what we do with Amazon, for instance, and through e-commerce platforms, through our plugins, we use NLP to sift through millions of SKUs and sort them and categorize them, so we know what price we have to pay the insurer, we know what category of warranty or shipping insurance that we're going to be offering. We know the we also determine the price, using dynamic pricing. Obviously, it's in some markets you're a bit limited in what you can do, but that's a great application. If we were a second step, there'd be none of that data transfer.
That makes sense.
So it's actually APIs that are really driving the whole opportunity for embedded protection.
Yeah, that makes sense. That makes sense. I'm going to switch gears a little bit, because one of the things that struck me in both your presentations was the number of countries you were in, right? Like a lot of fintech companies, it takes a long journey to go to country number 2, country number 3. Both of you guys were in, 8+ dozens of countries around the world. Can you talk a little bit about what it takes to scale in that world, and in a world of multiple regulations in different markets, how you see that, and advice and success, and what's worked, what hasn't?
Yeah, it's kind of like the complexity is for us is compounded by the fact that we do any line of insurance. So we do, just to throw out kind of examples to give you an idea of the complexity, we do pet insurance in India, we do trip insurance all around the world, we do property insurance in US, with particularly around renters. We do commercial lines, as I mentioned. So there's a hell of a lot of complexity around that. But part of our the critical thing for us was being able to do that as the USP. So all of the types of companies that we talk about, as in the tech giants, they're all global companies. So what is their actual need? We determined really early on that it was actually global, the getting global insurance programs up and running from a platform where you didn't have to go and speak to Pierre in France to cover French residents, and Henry in London, who likes a long lunch, but you might not be anywhere near London at the time. So that ability to do a global offering that's consistent to the consumer was critical. But also what you find is that all of the partners that we talk about have some sort of limitation, some sort of gap. We speak to partners all the time in America who can't get Canadian coverage. So it's actually resolving a fundamental problem that the traditional insurers have created because they don't have platform and coordination around global supply. And we experienced it ourselves. That's where the genesis came from.
Well, I don't want to be complex on the topic, and I want to take out complexity, and this regulatory framework is very simple to interpret. It's not in favor of the customer, as you already said. It's in favor of the traditional insurers. They want to buy their time so that they are not hit that hard by the digital change. Because if we use the requirement of regulation, which you need to fulfill, well, you arrive at a very, very interesting world where you're liable anyway in the internet, what you're promising, there is no escape, and the customer is better off because maybe he can understand what he's signing off. And insurance is one of the black boxes which is not working. You don't mind signing off Apple general terms and conditions or Google or whatever, because this is working for you. You can use Apple the first day, you can use your mobile phone, you can use everything. But insurance, this is a black box which is highly dangerous because these general terms and conditions and these regulatory frameworks, they are full of traps as well for consumers and for customers.
That makes sense. And one of the things that I've observed, by the way, is just one observation around going global, is that this is one of the powers and one of the areas where insurtechs have an ability to partner with carriers and obfuscate complexity for platforms. And this is I think one of the areas where innovation can be really powerful. I'm a venture capitalist. I'm perennially optimistic. You guys both talk about this global opportunity. I think we'd be remiss to not talk about the 2 billion people that are underbanked or unbanked around the world. I'd be curious how you think about how embedded insurance can actually not just drive disruption of traditional lines, but actually in many ways creating new markets for folks that might not otherwise have access. Can you talk a little bit about that and where you see this going over time?
Yeah, I mean, I talked a bit about underinsurance, which is more of a developed economy concept everyone in the room is familiar with. Non-insurance is by far the bigger problem in the developing world, and there's a couple of reasons for that. The oligopolistic structure. There's trust issues in a lot of countries and distribution issues. Once again, you know, the pandemic's been a boon for the digitization. However, the insurers in places like Brazil, India are nowhere near where the consumer demand is for a digital journey. So back to kind of our thesis on it is, and we're seeing this a lot, we work with 2 of the 10 largest airlines in the world. They're wanting their trip insurance in that case at the same time. Similarly, you know, for renters insurance, you know, renters are vastly underinsured in America, and adoption of it is increasing. The marketing activity around it is increasing. The awareness of it is increasing. Building managers are demanding it as a way to offset the liability costs and the you know, it's always good to be insured in multiple ways for the assets within a building, and you know, so it's kind of cost effective for to make that mandatory. So we're seeing a lot of that. So you know, it's, I think fundamentally the non-insurance is a reflection of income and distribution problems. But we do see a future where tailored, cost-effective protection can be offered, particularly in those economies because of the rapid digitization and the lack of physical infrastructure through distribution. That's a big change that we're seeing.
That makes sense.
Well, I totally agree with you. For insurance gap, for underinsurance, we don't need to look into the third world countries. We have it here in our developed world. Unbelievable amount. On the other side, well, we, as a small carrier, we are used to bring out new insurance products because we cannot compete on price with the established insurance companies. We are competing on service, we are competing on new products, we are disrupting the markets. And equally said, we are looking into emerging markets where farmers are depending on rain. If it doesn't rain, well, their seeds are gone and they will not be coming back. So into Africa, we plan to bring out parametric weather insurance, crop insurance, which pays out after a certain heat period. The farmer does not need to come back to us because we send him the money to his account or to the little shop where he picks it up. So this is a new set of technology which makes insurance available for people who cannot get hold of it. And insurance is kind of the basis of, it's not a source of income, it's a basis of income, it's a basis of employment, such like a bank account. It's something very valuable, especially when you realize that you can't get it that easily.
Thank you very much. We maybe with that we're gonna wrap. You know, the beginning of the panel, we asked the question, where are we now? And in this discussion, we covered a range of topics. We talked about the promise and the size of the opportunity. We talked about the potential for the underbanked just now. We talked about the global opportunity and the ability to grow across markets. We also talked about the challenges of how do you actually redesign products? How do you think about complexity? How do you actually do payouts really well? That's where we are, right? We're in the second, third inning of what I think will be a really big story, but one that is already showing its promise, and I think will get much bigger over time. And really excited, and maybe a big thank you to our two innovators who are at the front lines of this for sharing their wisdom. So thank you very much, and thanks to everyone for joining us for the conversation.
Thanks, Alex and Peg.